Good morning. It's Harvey Jackson from Produce Profit. Just going to go through a few news items, first day of spring, and just what I'm seeing in the possible Eastern movement here could be starting to move here soon. Um, North America biofuel sectors contracts amid trade and policy concerns, and I go like, holy smoke! Did you guys not see this? You finally get to write about it. I guess maybe it's a slow news day, and it is for me as well, but I still get a chance to talk about the market. So, Chicago corn prices set to challenge decades-long streaks, and the streak that Karen Braun is talking about is getting to the pricing average that gets set for February, and if we can actually uh, get back to that value, and sometimes it's challenged to get there. You can see here the ice level is starting to get pretty thin. There's only 9.1% as of this morning. And what I'm talking about is getting through the Sault Ste. Marie, the lock system. And yesterday I saw some ice makers breakers getting there. And of course, you want to get over into the T-Bay area to be able to move that grain through. Uh, Darren Fesser had this image. I thought I would just share it. And now it needs to do this. Uh, this here. It needs to build to confirm the neckline, so it's an inverted head and shoulders. But and this is where the potential is, but we'll have to see. It could be a double, triple top confirmation as well. It still needs to pull back probably a little bit before it'll go back up here. Uh, Mitch Miller put this out, and he just collected the data. And I think I talked about this a couple different times now. Who's holding the debt of the treasuries, and if there is a way to put pressure on the U.S. Is actually selling bonds, and you can see China, United Kingdom, Canada is up there and holding U.S. dollar debt as well, pretty significantly. But yeah, if there is a push to try to put pressure on the U.S., you could actually start selling their bonds. Proposed U.S. Port fees. This has been it's been in the news for a couple weeks now, but Karen Shroud put out this just how many boats that are actually owned by China, and you can see it's a big percentage. So the share of percentage of Chinese boats just on in the water, it's pretty big. So just have a quick look at the markets here. Canola is down. Rapeseed is basically flat. Soybean oil is down a little bit, a third of a penny. Palm oil at the time that I took the snapshot was just up a little bit. Crude oil flat, and your soybeans and all your wheats are down. The Canadian dollar down as well. So here you're looking at canola. We have had a good recovery. Now we're coming up against your 10-day moving average. And it could be failing here a little wee bit, but it could be a buy opportunity if we can continue to do this. And it would be very short term, knowing that April 2nd is right around the corner for more tariffs, and I think that would be more chaos. World will be reacting to that as it's going to be a reciprocal for all countries that U.S. trades with. You can see this on the new crop as well. Uh, Here's your European rapeseed, and it is $168 more expensive than Canadian canola, priced in Canadian dollars. Here, nice, good recovery yesterday, and today it's still trading in the green just slightly. Uh, but we'll see how that continues as well. But that's a pretty good recovery off of that slide that it had along with canola. Soybean oil is kind of faltering here a little bit as well. We'll see if that can get any strength. Palm oil is the complex that seems to be holding up the best of all the veg oils that we have prices on. Soybeans, I put that trend line in there, and I'm not saying I'm very good at drawing these things. It's all subjective, but that is not a good trend for soybeans. It doesn't seem to want to be able to get its head above that blue line at this point. So trend is not your friend here. Soybean meal, same kind of thing. It's probably in a descending wedge here. Canadian dollar, except for these outliers here, you're basically trading up to 70 cents and down to, let's call it 60. It's not quite down to 69, but 69. We might as well say a penny swing both ways here, from 70 down. I'm not bullish on the Canadian dollar at the moment. Let's have a look at wheat. Wheat, it has trended down for a few days here, well expected, but it still seems to be in this channel going up. And if we looked at it on the longer term, so this is the weekly, we have not made it through this trend line to say that we're going to be bullish wheat. We have to trade higher than those highs that we saw made earlier this year here. Here's your fall wheat price. Still looking to get up to the top end there. $7 kind of is the range for getting the futures for pricing more grain. And your Kansas, it's not as nice a channel. I would say we're looking for this breakout here, and it's quite possible that we're going to continue to break out of there. At least that's what it looks like. Here's your Kansas in that same kind of timeline on the weekly chart, and it doesn't look like it's breaking above that line yet as well. Your fall price maybe a little bit better in that channel, of course, but it's still uh, likely having to get up into this 680-ish on the Kansas, which would be relative to the $7 on the Minneapolis that would be targeting. Chicago, not quite a steep curve. And here's your milling wheat, and it's pulled off the bottom there as well from the Matif or the French wheat. Corn, um, it's bumping its head on some of these moving averages and kind of consolidating to lower here at the moment, but it is green at the moment. Here's live cattle, almost back to the highs that were made back in January. Pretty steep climb here, but it's trying to catch up to its counterpart here, the feeder cattle, and which is making all-time highs. It beat that January high a few days ago, and it keeps on climbing. And that's all I have for you today.